Hey, it's Mack with PriceActionTradingSystem.com, and it's Friday. It's October 10th. This will be our chart lesson for today, and seemed like this week went by in a blink. Um, Lots and lots of entries again today. This is more of a range day. The highs of the range, around 1928 for the most part. We broke above there a couple of times, but we got the most touches and started to get the most resistance right around that 1928. And then the lows were 1909 to 1910 area. That's where we seem to get the most touches. And again, we broke a little bit further lower than that, and it's probably about a measured move to that right there. And uh, I was looking at this early, a two-tiered trading range coming down through here, and it's this all looks valid right here, so I believe it's probably valid. Um, you got a break here. You're working on a retest now. Will we get a new low? We'll see. But I'm guessing we're going to at least retest this low before it's over. So we'll just have to see. But there's definitely a support kind of resistance level right in here as well. You can see where it's acted as support, and then it acted as resistance later. So we're getting some swing on both sides. So we could bounce there. I mean, I'd expect to get a little correction there. If it goes straight on through there, we're probably headed to here. So we'll see. But you could have used this, but it didn't really help you a whole lot. I mean, you didn't get to trade it but once, and then this time it went on through, so it wasn't very helpful. So I'm just going to remove it, but it's just something I was looking at, and I do believe it probably is correct. But if you look at the shorter term trend channels, they're all obvious, and they all follow the rules, basically to the T. And you got one coming down here early, you got a break, new low, then you're headed up, you got a break, new high, headed down, you got a break, and you really didn't get a new low on this one the way I have it drawn here. So this one's a little bit, a little bit different. But what happened is you found so much support here at 1910 that you couldn't get below that. So they tried to tested it once, and each time it got to that point, and so now they give up and it goes the other way. And then you got this one going up, you get the break, new high. You got this one coming down, you get the break, now you got a new low. So, and there might actually be something else going on in here. I see what looks like to be a kind of support area right across there. So, could be there's a bigger two-tiered something or other going on here with a midpoint. Looks rather obvious, so maybe you got that going on there now. We'll leave it on there for now. But the problem is you don't get a lot of touches of this one. That's why you got to figure out how to get these midpoints in here, because all your touches were off this midpoint for the most part. There's actually what I missed right here, right there. And that one probably went back and forth. That's the reason I forgot to put it on there. I went back and forth between whether or not to make it green or red, and decided I'd come back to it, and I forgot. But that's what I'm seeing today. And you see we bounced right off that level again, that line, when I put it down there. And so, but let's back out where you can see a little more. I mean, there's lots of movement, lots of trades. You don't need but about an hour's worth of trading if you're just patient and you figure out where the trends and the support and resistance is, and just sit there and be patient and wait. Somebody sent me their chart and they asked me to take a look at it and tell them what I thought about their trading. And basically, there were way too many trades, and the guy's entering real late. If there's an entry here, it's one tick above this bar. You can't wait till it's way up here. Sure, it worked this time, but what'll happen is you'll get one that'll, like this one, that'll go exactly enough to get you out, and then it turns and goes down. So if you enter late, you're dead. And on most days, you cannot be late. You can't even be one tick late, because these trades are designed to get a minimum of 4 ticks, and it takes 6 ticks to do that. You got the break above your signal bar is 1 tick, and then it has to travel 4 more ticks, so there's 5, and then it usually has to trade through that your limit order to fill it. So there's your 6 ticks. So it really almost takes 6 ticks to get a 4 tick scalp. And so these trades, so you can't be late or you'll find yourself in a lot of losing trades. And so just be aware of that. And don't be late, and wait for prices to get to the expected places, and then wait for the setup. Just because prices come down to this trend line doesn't mean you necessarily buy it. You wait for the setup. You wait for you have to wait on our rules and follow our rules. And so I'm just coming over here to look, see how this had bounced off that line. I'm just seeing what it's doing over here. Anyway, let's go back and start with our trades. But just understand that you can't be constantly looking for a trade. There's areas where you just can't enter. And this is a good example. It starts going up and down, up and down. You just get whipsawed in every direction. Just sit tight and wait on. It's usually going to fail out one side or the other. We traded up into this little, so the odds are it'll probably succeed out to the upside. What happens? It fails out the low side. They trap all the shorts. And anybody that had gotten long, they trap them out, and then it reverses. Goes out the other side, comes back, gives you the retest or the breakout pullback, and then you enter. And I can show you that over and over and over. And so that's why the rules say you don't trade in this stuff, and you don't take the breakouts. Sure, you would have gotten, if you went short right there, it would have worked for a scalp, but a lot of times it won't. So the volatility is a little bit bigger today, so it's not that hard to get a scalp if you're entering in the right direction. In fact, you could probably get a point or two in most cases. So okay, let's talk about the trades, and I'm going to wrap it up for the week. And I meant to already have this done. I was through trading really early today, and I meant to do this early and wrap it up and get out of here and start my weekend a little bit early, but I got distracted. But anyway, when I came in, prices were starting to work higher. We had traded down, had a little break, a new low, and you can see prices are kind of swinging both sides here. So this looked like a trading range, and when I came in, we were actually in this mess right here. So you just sit tight. It was real tempting to go long right here, but I think you have to wait on a little better setup. You don't want to enter. If you're going to trade this is what you'd have to do. You go long here and consider going short there. But that's a pretty good move up through there, and you're coming off the upper side. If you drew this and you drag this to the top, you're coming off the upper side of the channel. So the odds are you're probably coming down to here, but on an uptrend, you got that midline, and notice we couldn't close behind it. That's a good signal. We're probably going higher. But anyway, when I came in, we were in this stuff right here. I don't think you don't want to trade it to the short side. There is a trap to the upside there, but notice that's a failed second entry long, and then and then it turned down and then it went back up out. So it just whipsawed people, and people just get all, people will be short, then long, and short, then long, and they just get all chewed to pieces. So just stay out of that right there. Don't trade congestion. There's other people that'll draw that as a wedge. It looks like a wedge. And what I always tell people is, I don't believe there's any such thing as a wedge. What happens, there's other support and resistance areas that make it look like a wedge. And you can see what's causing this to bounce and close up that line, both the EMA and that midline. And this is where your resistance is. This is a little flat, but it's working. The closes are working a little lower each time. So it's losing it's losing momentum, and that's what happens. And they sell it off, and then it traps everybody, and then they take it higher. And so that's what causes these wedge-looking patterns and so forth. I think that everything, I don't believe in drawing that wedge pattern because there's no way to know how to trade it. I know they teach you whichever way it breaks out of the wedge, you go that direction, and look what happens. You get whipsawed and it's going the other way. So if you got to understand what's really going on, and if you understand what's really going on, you'll understand that there's no such thing really as a wedge pattern. Yeah, they're there, and you can see them, and you can draw the lines, but there's other reasons. There's things that are causing them. And what's happening here is this midline and this EMA is what is holding prices from going lower, and yet there's resistance across here so it can't go higher, so it looks like a wedge. So hopefully that's helpful to people that ask me about wedges and so forth and what I think about wedges. But anyway, we had the failed break lower. We went up, we failed, we went out the high side, we failed, we come back, and you're looking for most likely a successful move out the high side because we traded up into this, and that's what our rules tell us. So this turns down. There's a nice entry right there that looks like a great short, so you know some people got trapped. Just go long right there, and that's a second entry counting off this low, and you've already got people trapped to the short side. And this is probably going to trap some more, and then it runs up, pulls back. Now there's a failed second entry short there. Notice that new low, that swing low is lower than all of those swing lows there. And so it moves up. First entry moves up again. Second entry short, counting off that low. It fails and turns up. It's right at this trend channel, so it's a little bit risky, so I drew it in green. I didn't really like it, but it is a trap, and there are reasons to believe you're going to get two legs here that would be a measured leg similar to this one. So there's reasons that an aggressive trader is probably going to want to take that, and you can see it's basically a perfect measured move, and that's what usually happens. And this one, and there's two legs in this first leg, and there's two legs in this second leg. Notice that one leg up, pull back, second leg up. This one leg up, pull back, second leg up. The market moves in twos, so we're always looking for things to happen in twos. Keep that in mind. And then you're working down. It was real tempting to enter long here. If this bar would have closed on its high and been higher than this one, I would have been thinking long here. It wasn't quite back to the trend line, so that's a little concerning as well. So, and notice how by the time it broke higher, you've got three bars stacked up there side by side. This one's a little bigger, but you're not going higher, you're not going lower, and this one actually closed below the EMA. We overshot it here, so there's a chance we may overshoot it down here or come up short. Now, but like I said, if this would have broke on higher and closed on its high and then went higher, I might have liked it. It always helps to draw your short-term trend lines right through here, and it looks like it could be here, but I'm thinking it's really right here. And the way you figure it out is if you're not sure, you see how it fits on the other side, and it should fit nicely on the other side, and you can see that. So you got a little close outside there, not by much, and then you got another close outside here. This one's more obvious, and then moved to a new low, and then it reversed. Again, these are the ones that are really tempting to take these right here. But I think you're better off to wait on the way this market's been lately with the big moves and some of the big bars. I think you're better off to wait. So I don't see any reason to take any. There is a long trap right there, but you can't go short into that. And then there's another little long trap right there, and it did go higher and then go out the low side. But now you've got to close, and once it goes one tick lower, you got a new low, and it is a good chance you can get trapped down here, and that's what happens. They trap people down there again, and they take it higher. Better off, look how bullish looking at it. It doesn't even hesitate really at the EMA. It goes right on through, pulls back, tests it, and you get that little doji there, but it could have easily closed on its high and looked more like this bar, a little reversal bar. So I liked it for a long to get another leg up, and this one just keeps on going, and then it pulls back. This is even though that would have got a 4-tick scalp, it's still just like a failed second entry short. And notice the new low, pull back first entry, pull back second entry, and this thing is really bullish, so you're almost always going to get one more little push up, just kind of like here you got one more little push down. And there's enough room to scalp out here, and that's a nice bullish bar. So I like this one to the upside based on that trap, thinking that we would test this again, and it goes on through. But I don't think you can go long after that. This is a breakout pullback long right here, but I just think it's really risky since you've turned here several times. The odds are, look, we've turned 1, 2, 3 times in a row. The odds are that it goes higher and fails and comes right back down, kind of like it did here. And so I think you're better off to wait because you've had your break of this channel. You've got multiple legs up to a new high. So just sit tight now and let this play out. Let the momentum play out, and then you'll probably get a trend line to the downside, and you can start trading downside. But what happens is people get too eager to enter short up here. And yeah, there's a second entry short right there that would have worked. But look, it bounced again, and you might have gotten trapped there. So just wait. And notice you got a first entry long, pull back. Now you got a second entry long, so if it breaks lower, you got a long trap. And this one, I like this one to the short side, but I don't because look at it's got two matching bars right there. So there's some reason that prices aren't going lower. If prices would have broke on lower here and closed low, I would have liked going short there. But when it didn't, I think you're better off still to just kind of wait. And guess what? It goes up and tests again, then turns and comes down. And so I liked going short then, but you really could have gone short right here. So you could do it either way. However, when this thing started getting hung up and you couldn't get out, you might have gotten shaken out of that one. Once it started lower, you're looking for at least a measured leg like that one, but you may get a reversal here. So if you're looking for at least a measured leg, then you're looking for this one to go down to right in here at a minimum. So there's a couple different ways you could have handled this one. I do believe, though, if you waited and didn't go short here, that it was a little bit risky here, even though it is like a double top and a double test, and it turns down. If it would have went on out there, I would have liked it more. Then you get this big bearish bar, and you don't want to be going short way down here, even though it would have worked. So you had to enter either here or here. And if you didn't enter here, this one gets even more questionable. So, but there is a trap there. There are different reasons to go short there. So I'm leaving it red. I'm not going to change. I'm not going to make it green. And then you get two legs back up to the trend line. Notice the new low. First entry, pull back, second entry, big bearish bar right there. Just go short right there. And there's actually, let me move this. There's actually a second entry short right here. But look, you got two bars stacking up. One's a doji. Don't go short there if it breaks lower. I would start my count over right here. You're not back to the trend line either. If you got a big bearish bar here, that might be different, but it doesn't. So it comes back, and then you get your big bearish bar. So wait and go short right there. And even better, wait on the second entry, and it comes over here. And it takes off. Now notice how big some of these bars are getting. The volatility is so big that the bars are getting bigger. And somebody asked me about that. You probably cannot enter with a stop right here below this and get your safety stop above this within 2 points. In fact, I know you can't. So what you got to do, what I recommend doing, is either you got to skip the trade, but this is where some of these big moves are coming from. So what you might do is go ahead and put your stop where it belongs, 1 or 2 ticks above here, and then make up the difference with the extra ticks by getting a little bit more on your scalp. Because if the bars are bigger, then the volatility is a little bigger, the moves are probably going to be bigger. So you need to be real careful with that, but that's just an option that you can play around with and experiment with, and give it a try if you like. But obviously, if you're risking more, it helps to get a few more ticks. I mean, if the bars are big enough that you got to use more than a 2-point stop, then you're probably going to be able to get more than a 1-tick scalp as well. So just increase your scalp by whatever additional you have to. So as an example, if you got to put your stop up here and it takes an extra 4 ticks, then try to get 2 points out of your scalp instead of 1. Hopefully that makes sense. But two nice setups right here off the. This is a breakout pullback short. It's a second entry short counting off here. It's another turn down right off that trend line. You haven't touched this lower line yet. In fact, you go straight through it and keep going until you end up bouncing way down here. And here's another little trap. There's a new low. It goes back to the midline, pulls back turns up and then goes down, and you're looking for prices to come down to here, this measured move. So when it went out higher and turns back down, there's a trap there. There's a second, you're going short at the low, which is, a little scary, but if you can see the bigger picture and you understand what's going on, I think this was a good setup. And of course, it was a quick, easy trade. And then you kind of get hung up here. There's another second entry short here. But we've had a big move down, and we've gotten really close to this line. And so there's a chance that maybe I don't have it drawn exactly right, and it needs to go to the other side. So you got to be careful in here when it starts to, because all of a sudden you'll get a big rally like right down here and get trapped. So you got to be careful about that. The better trades are going to set up over here, and you might risk a couple off of the midline. But eventually when it touches down here enough, it's going to bounce. And when it does, it's going to generally be like this and catch people off guard. And, and you don't want to get caught off guard going short way down here without enough room to get out. So this one's a little iffy for that reason. It's not a perfect setup bar either. And this is actually a little lower, so even though it's still like a two-legged pullback to the EMA, and it's still like a second entry short, but it's a double top. I think you're better off to wait till here, and then you get the trap, because now you got the new high, pullback first entry, pullback second entry, it traps people and then goes lower. And then you also get a little breakout pullback short there, so you might have even, there's no reason why you couldn't go long right there. But if you're already in here, unless you want to add on, I just would skip that one. So, and then now you've come all the way down here to where your previous, you've broken below your previous low, and so there's a good chance it's going to bounce. And so I don't think you want to go short after that. And it gets back up above that point, tests it a few times, it comes back and test it again. But notice this two legs up, and then you get that little extra. That's your second entry short right there. It traps people. And then you get a failed second entry long. So there's two ways again here. It's almost similar to this last one up here. Either enter here or here, either one. But when it bounced here, that's not a good sign. You would have already been out of these with your scalp. You're not going to get any runners. But I don't think you want to go long until you get the short trap here. Notice this new swing low. It runs all the way up. It makes a new swing high. Comes back, makes a higher low. Makes a higher high. And then you get your second entry short here after two measured legs up. It quickly fails. And so, you want to take that trap to the long side, and you're looking for a measured move similar to this side. Of course, you would have already had this off the highs and lows. You can see that there. I originally had this a little flatter than this, and I adjusted it on this bounce. But it doesn't matter either way. You got your trap right here, and prices are going higher, so I like going long there. Most likely all these shorts are going to exit. People that are still holding on. And then it kind of just got hung up here. And you're really better off just kind of stay up. But the trend is up now. So you got a little double bottom with a little trap. And it turns back up here. Aggressive trader would probably go long there, especially with that big bearish bar, then it breaking lower and turning back up. I circled this one. I actually circled both of these in green because you're looking for a new low here, and but you're waiting for the signal that the move up is over. And so that was another reason I felt like these were both a little more aggressive, even with the trap there, and that's the reason they're in green, because you're really, by the rules, we're looking for a new low. And you really wouldn't give up on that new low until over here, and these are both longs. I don't know why I got them marked red. My mind lately, I've just seems like I've got a lot of distractions going on, and just simple little things like that. And if you're wondering about one of the videos earlier in the week, while I'm thinking about it, I had a phone call come in, and then you could hear me talking on my phone call, and that was the end of the video. Well, what happened was I thought I paused it during the phone call, and then when I came back off the call, I unpaused it. Well, evidently I didn't get it paused for whatever reason, and so when I came back after the call to unpause it and finish the video, I paused it. So it was on pause during the whole, and it was probably 20 more minutes to that video because I think it was about a 30-minute video, and there was some good stuff in there. And I hate that I didn't record it but that's what happened. I apologize. It just seems like my mind is I've got too many things going on here lately, and it doesn't pay to be distracted in trading. Um, so I've been trying to do my trading quickly in the mornings for a couple hours, and then stopping. And it's kind of hard to stop when you're getting this kind of movement, but I've just got too many things going on with some of my other businesses, and so I'm just trying to trade a couple hours in the morning here and take care of my other stuff. So I apologize, but anyway, back to the chart lesson. You're looking for a new low, and this is um, something you just stay out. It was so tempting to try to get in this. I almost went long, almost went short, almost went long, almost went short, and then you got this little bullish thing, and it turned down. But you really couldn't go short until it touched this line. And I drew this line off this side and drug it up, and so you're waiting on it to get back here before you go short. Well, this was the first opportunity, and it was tempting to go short there, and I watched it, and then when it turned back up, I'm thinking, well, shoot, now it's tempting to go long, but we're still haven't closed outside this line, so it turns back down, and by that time you're thinking, man, I almost got whipsawed 2 different times. So just don't try to enter in that stuff. Wait on the failed breaks. And you can see the line had moved down to about right here. That's where you're getting the most touches and closes, and that's like a failed breakout. So I like going short below that bar, thinking that you got enough room to get out before you get back down here to these lows. And if you just had your stop there, it rocketed off. And this probably should be green. I'm going to change it because I thought about it, and that's probably a good sign to me that I'm probably should be waiting on this trade. And so I'm going to leave it green. And then, of course, what happens when it fails out the low side or breaks out the low side? It fails. Now, we traded down into this thing, too, so I was expecting it to go on lower. But what happened is this is just a range day, and this range, the bigger pattern of the range, is taking over, and prices can't go any lower. And look where we're bouncing again, right at that same spot, all the way across there where we bounced every other time. Will it hold this time? I don't know, but wait till you get the setup before you try to trade it. So we start reversing, and then you get the trap right here. I didn't really like going long there, even though the trap is triggered right there. But when it turned down again, and you get that little double bottom and it bounces up, I liked going long then because it was pretty obvious, they had to trap people twice to get it to go, and then look at it, boom. So I liked it to the long side then. And then now you're back up here and more of this stuff. Look what happens. It breaks out and it fails and comes back. It was tempting to go short there, but you can't go short because of that little channel that's working up right there, and that looks really tempting, but you got to go long at the very high, so you got to wait on something better than that. And instead you get a break, and you get a move up, pull back, and then a chance to go long right there on the retest. And this thing goes all the way back to the top. And that got you right into the lunch hour. And I just, there's so many trades and so much by the end. It's the same. I'm not going to go over every trade today. There's just too many of them. If you were still trading into the lunch hour, there's a bunch of trades in there. Here again, you got a little congestion. Stay out of that. But notice this little two-legged pullback here. It's not a really nice setup bar. You might have waited on the trap, which didn't come till right here, and then you had to kind of ride that out, but it still worked. It would be really tempting to go short below that bar, but you either got to get in back here, or you got to wait on this correction and then enter. So there's some more trades in here, and then you get your break, and of course you were looking for your move down to your new low, and we've been working down ever since. So, but yeah, the best thing to do today was just follow these short-term channels, and it really, they both, most all of them worked out. Though, generally, when you get your break and you don't get your new low or your new extreme, I guess you should say, because sometimes it's to the upside, it will be because a larger pattern is not allowing that. So in other words, when it broke this one and tried to get its low, it couldn't. It tried it a couple of different times and it couldn't, and so they give up and they go the other way. And the reason is because there's a trading range here, and the support was too strong. And you can see we bounced there again on the way down. We're going to test it yet again, and if it holds a couple of times, we'll be going the other way again. So we'll see. But that's pretty much it. I think I'm going to call it a day, call it a weekend. I hope you've had a good trading week. I mean, it's been really nice. If we back out of this and look at the really big picture, you can see it's just a trading range today. And, I'm calling it from about 1909.50 or so to about 1928. That's where you're getting most of your touches. And you do have an overshoot on both sides. But it's been a good week, and, the volatility is getting bigger. And, if you're not too sure, you can always go to a bigger chart, although that changes your stops and your targets and all that. I think you're better off just to, rather than, if you're scared, if you're not comfortable or you're a little leery about trading when it moves this fast and it's this volatile, then you shouldn't be trading live anyway. So just get on the simulator and just try to trade it anyway. Because with time and experience, you'll get better at trading a faster, more volatile market. So this is part of what we do. So work on it. I mean, you don't see it as much. No, I agree. And but you never know. The market, it might start getting this fast for a while. And if you get enough experience at it, it's not any different than trading it any other time. It just moves quicker. The price action does not change. The price action is not wrong. It just moves so much faster that you're either going to find out you're wrong real fast, or you're going to find out you're right real fast. So just keep that in mind. If your best bet might be just to go to the simulator and try, just do your sim trading. So rather than trying to trade it live, if you're just starting live, or if you're just not as comfortable trading live, even if you're profitable, if you're not comfortable, because that's the key. You got to be comfortable. You can't be distracted like I talked about earlier. You got to be on top of what you're doing, or you're going to have problems. So, but anyway, I'm going to wrap it up. I'm going to call it a week, start my weekend. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.